Yeah, definitely not. People have no idea.
I. It's so funny. Okay. Oh, all right. I'm gonna press. Ah, I missed the intro. Doesn't matter. Going live. Can you guys hear us? They're making fun of me, Kirk Lake, because I reviewed
So,
the Gold Ventures Sitfolio,
yeah.
and during the podcast, I kept like I do dyslexia. So I couldn't say Kirk Lake. I couldn't say Kirkland Lake. I kept saying Kirk Lake.
All right. We are live. The YouTube, it's delayed a little bit, right?
Yeah.
So, yeah, it just popped up. So people are tuned in and ready to go.
Okay. Okay. First sound check, guys. Can you hear me properly? Yeah. Okay. What about Garrett?
Can you hear me okay? Good.
Was that a yes sir for you? For you too?
Yes,
Yeah.
sir. It's like,
Yep.
yes, sir.
Okay. All right. It's already coming out. Already, everybody wants to see a stock chart. Okay, guys. I got Garrett. Before we get too sidetracked, uh, Garrett's like the silver macro guy.
Yeah.
I could let you talk, Garrett.
Yeah, sure. Yeah, I'll introduce myself. Garrett Goggin. I'm a CFA, chartered financial analyst, and a CMT as well, chartered market technician. So, I love Patrick's stuff. We connected on Twitter, both focused on the silver industry. I've been covering the silver miners since 2011. The whole sector range of 25 to 30 different silver companies, and I'm seeing the ups, I've seen the downs, I've seen a lot of changes, but I'm coming at this from a more fundamental sort of view. So I know the companies inside and out. I've been through a few cycles. I haven't been as bullish in the past as I am now, but with what happened earlier this year with COVID, silver getting hammered, the government coming in with massive stimulus, another $900 billion of stimulus, direct payments to U.S. citizens. I'm on board the silver train here. I think we're looking at much higher silver prices over the future. So, I'm bulled up too. So I'm happy to be here and talk to Patrick.
Awesome. All right, guys. We're gonna go just like the macro landscape. TradingView recently, they just popped up the 100-year charts there, and here I have the silver 100-year chart. And just to put in perspective where we are, look, it's a great inflation hedge, higher lows. I know it's super volatile; it goes parabolic, and that's when everybody's goes into mania, and we all love silver. It's just a beautiful upward trend line since 1930. And right now we turned the corner. This is like a 3 months chart, so we don't see the low of 2000 of the March Madness. And Garrett could probably talk to you why he went full gung ho silver after March and when he saw like all that fiscal stuff happening. But actually, this for me, even technically on a whole bunch of indicators, look, this is like the TSI. Could have put any other indicator. We're just turning the corner, heading back into what I call the bull zone above the zero line. And this is a quarterly chart, so this type of momentum, you don't easily overturn that. So once you get going, for me, these lows right here, going back down here, it's okay. I'm not gonna jinx it. I'm not gonna say anything, but I have a high conviction that we've turned the corner and we're gonna go head out to do higher highs eventually. And that cup and handle that everybody's been looking at for 40 years is just begging to get fulfilled right here. And that's pretty much the landscape where you are, guys. You're at a turning point. Of course, it's volatile. Look, even today, up 3%, down 2%. But you know that silver eventually, it does these 5, 6 lock limit days back like in the 70s where it's just going to go mayhem. And you want to give yourself a chance to get to that. You don't want to over lever at the beginning and get wiped out because you want to turn 1,000 to 1 million and your position size is too huge, your sell stop's too close. I think the best move is to position size correctly, to be able to sit tight and ride up these gains. Jesus, I just turned my head. I looked at the chat. There's a whole bunch of stuff.
Yeah, yeah.
So
Look forward
that's
to
pretty much it. We could look at the DXY. Okay, that's a huge supporting.
Yeah, I like these, the fundamental supporting the price of silver, right? You look at the Dixie's breaking down. It looks like look at that. There's no support all the way down to 77. That's more than 10% down below.
Yeah, exactly.
Yep.
I
Yep.
have my target. Yeah, I have a target around here. They're 81 at least. They're around this congestion area right here. We should at
Yeah.
least be, and it like another indicator. It's like once you start turning the corner on quarterly charts, you don't. It's not reverted. Look, it takes a lot of energy to revert
Right.
this type of momentum there. That's
Right.
what it's like. Garrett, maybe you could elaborate like on the macro environment. What's been unleashed.
Yeah.
It's not something that's going to be.
The macro environment's it's a tidal wave, it's a
Yeah,
tsunami. That's, it's not going to stop. You get the negative interest rates,
yeah.
so you're not getting anything on your debt. You get the dollar moving lower, so you're actually losing money on your dollar denominated debt instruments. And the fundamental backdrop is extremely supportive of higher silver and gold prices over the next few years. And then the government spending trillions and trillions of dollars. Our political race just ended, and it looks like the Democrats could possibly be in charge of the Senate, House, and the presidency starting next year, depending upon the Senate race in Georgia. And the last time that happened was 1977 through 1981 with Jimmy Carter, when the Democrats were in control of the three branches of the government. And they'll be spending money like we've never seen before. So you need to protect yourself, protect your investments, protect your portfolio, protect your family, and own assets that do well in when there's a lot of money printing and eventually inflation.
Yeah, I agree with that. Here's like the long term rates, guys. The It's just been going down since 2001, and even with the ups and lows, what has the precious metals have been doing since 2001? They've been outperforming U.S. equities, and they've been discounting this debasement of this currency. There's a cool chart there I could priced price priced in gold. I don't know if you guys have ever been on this website
Mm-mm.
and check it out. They have the US dollar half life. So this is it's been decaying. It's been since
Mm-mm.
2001. It's been every 4 years, the US dollar has been losing half of its value.
Mm.
It's just insane. So everything fits with the precious metals waking up in 2001. And it's been on a hiatus. It's been like losing half its value since 2001. And this is like USD price in milligrams of gold. We've been on a hiatus for a couple of years in our bear market. But right now we seem to be back on track. Oh, here's the chart. So this is like, look at that, the curve. And he even drew the line there. This guy's like a genius. This guy who did this website.
Uh-huh.
Everything on this website, everything priced in gold. And right now we're on track to go to lose to resume their US dollar is not going to be worth much
Mhm.
going towards the end of the decade, which also fits well with cycle analysis that silver and gold should be topping out towards the end of the decade, 27, 28, and with a huge drawdown, maybe late 2023, heading into 2024 for the US elections. But those are details. We'll see in the charts as we get closer. But yeah, we're just turning the corner, guys.
Yeah, yeah, I agree with that. And we just had a nice little breakout, right? We had a nice little breakdown of the dollar. We had a nice little breakout of silver price. Silver's been in a consolidation for the past, like four months, and it just broke above its trend line.
Yeah. Here's like the silver junior miners, guys. They're hitting. They're heading. This is a quarterly chart. They're heading to go test its breakout. It's 2016 quarterly defined highs. Right there, guys. So these type of patterns, these double bottoms. If you want to measure move for the, okay, I'll get greedy. So this is just an easy measured move, linear measured move. So that's a non-greedy target, and usually with anything that's priced in something that is debased exponentially, like we saw the US dollar is getting depreciated exponentially, it would be honest to use a measured move in percentage. So right now, this is my easy target for silver junior miners, 25 for SILJ. And if we really want to get crazy, I could put in a log chart. And move that up 193%. and this would be my greedy target. So for my silver junior miners, once we do a quarterly close above this neckline, I'd have some a triple there, or two bagger for the SILJ there, go up all the way up here. They still have the problem. There's a sound issue somehow,
Yeah,
somewhere.
someone just reloaded the page and it worked, and I reloaded
Ah,
mine and there was a spinner, and yeah, maybe reloading it worked.
okay. Yeah, do that, guys. Reload. It's not my fault. It's your fault. You guys listening, it's your fault.
Hmm.
All
Oh, it
right,
worked.
cool. So I don't. Is there another? You want to look at the DSI before we head into charts, maybe, Garrett?
Yeah, we can look at the DSI.
Here, it's on.
You're gonna pull it up. Yeah, daily sentiment indicator by Traders Press. They, measure sentiment from multiple of market participants, hedge funds, individual investors, traders, asking them whether they're bullish or bearish on silver. The blue line, this is 20-day moving average. It lines up, it lines up pretty well with, tops and bottoms. If you look at what happened in earlier this year, you'll see that it went up to 80, 90% pretty quickly, but that was the beginning of the move. It shows that sentiment's high. Sometimes it's the best time to get involved in these things. It's not a time to get short immediately right away, and then when it's down around 30, it's usually a good time to get in. And we had our peak in August, and it's traded down since. It's been consolidating, and now it's beginning to turn up. One thing to note is that, silver prices, they remain high. Like, I'm a fundamental guy. I focus on the silver miners. And one of the major things that matters most to silver miners is the average price of silver over the previous quarter. And the third quarter, the average silver price was 50% higher than the second quarter. And you can see that in the chart. So silver miners' margins exploded.
Mm,
And one thing to note too is that in the fourth quarter, the silver prices remain high again, which means they're going to have another good quarter in the fourth quarter. And it looks like silver's going higher. So, these silver miners they're flush with cash. Their profit margins are the highest it's been since 2011. They're different companies than they were before, because their profit margins weren't very high. It was a little boom bust, hard to allocate assets, going from profitability to losing money in the next quarter. But it looks like we're in a new era now, and you can see like companies like First Majestic just announced their first dividend. They're paying out 1% of net revenues to shareholders. So it's a step in the right direction for the silver miners. And the higher price of silver, average price of silver, is really helping them out. And it's a good thing to see, because since 2011, the last time silver price peaked out, a lot of the silver miners were bailing the industry. You look at Silver Standard. They had a lot of silver mines. They bailed out. They bought gold mines. Hecla's bought gold mines. Coeur owns gold mines. Exelon just recently is doing gold mines. Great Panthers doing gold now. They're all 90% gold.
mm,
America's silver and gold. They're gold now. It's the reason they did that is because the margins were higher in gold versus silver. The margins for the past few years were, I don't know, they were negative at times, and then 10%, 12%, 20%. Whereas the gold mining margins have always been pretty constant, around 45%. And now silver margins are catching up to that. So we're in a really healthy point for the silver mining industry and the silver price as a whole.
it's how, like, sometimes I hear, let's say, silver price, people say, oh, look, it's high enough. Like, sometimes we always want to see silver price go up to justify a miner go up. But like
Yeah.
you're telling me, sometimes just the price of silver doing a higher high and plateauing there, it's enough for those numbers to for the silver miners, when they start releasing the reports, they're pricing in
Yeah.
that elevated silver price, and they could get great earnings, right?
Yeah.
Or
When the silver price spikes up for one day and then it comes back down, the miners aren't going to realize much of that move or value. You need a sustained silver price over a longer period of time, because, the miners, they mine silver every day and they sell it every day. So their revenues are reflective of a 30-day average or 90-day average of the silver price. So the higher silver prices are, the higher revenue is going to be over a particular quarter. And then investors in general, the higher that silver price stays up there, the more faith they'll have in the miners producing this revenue and income consistently. And investors will start bidding up the shares and putting a higher multiple on these silver companies.
Interesting. I did not. There's so much dynamics behind the chart. It's like I was talking to you before. It's like the chicken and the egg. Is it the
Yeah.
like how all this is related? The price of silver, how it's priced in, and then people discounting maybe future appreciations in silver price. Also, probably a part of that. Those silver miners going up a little bit.
Mm-hmm.
Okay, somebody in the chart. Okay, are you going to put options on SILJ? Are you going to put options on the SILJ? Oh,
Well, that's if you want buying put options on the SILJ. No.
um,
Well, we buy put options on the
yeah, that means I would
SILJ.
expect it to go down.
Yeah,
No.
correct.
Look, for me, there's a rule number one. If the price action is above a one-year moving average, you don't short it because the intraday, intra-week volatility, it has a higher chance of resolving upwards. So at any moment, like I said, the macro waves, the macro tide of the price action, at any single moment, it could swipe you upwards. So you
Pull
never.
up the silver price, Patrick, and we can talk about that. And you can, yeah, chart it out. Did you primarily look at the futures or the contract for delivery or what?
I look at both. I look at the spot, and sometimes when the action gets intense. So like right now, I could do it. Look, I do the I call it. I have a little setup in TradingView. It's I take the spot
Yeah,
minus the next contract in front,
yeah.
and then I see if there's some type of backwardation. So if nobody, right now the premium over spot is wow 50 cents. So there's no
Oh,
backwardation. When I see there's an extreme in
okay.
backwardation, look,
Yeah,
you kind of get a spike down. That means that nobody wants silver. The price, it's
yeah.
too compressed on the downside. It's bound to do a bounce up because
Yeah.
eventually I'll do it for the when the price action goes up. Actually, when fear of missing out comes out, when people think silver is going to the moon, usually we have a huge premium on top of the spot. Everybody wants silver, so
Right.
the people are discounting higher and higher silver prices. It's more apparent in let me do for the gold, just to outline that. Okay, check it out. So here was the and there's kind of some weird stuff. Look, I don't want to be a conspiracy theorist about this comics exploding, but
Mm.
before usually there's like the premium over spot gradually goes down close to expiration day, and after that it kind of resets up to price in the like the time decay. But since March, it's been really going haywire. But you see, this is the how much premium over spot for gold, and this is after March Madness. So as the more and more the price of gold goes up, the discount there's more and more premium over spot, but it's not
Mhm.
a. And right now we're in another turbulence area where I'm having a hard time trying to dissect exactly what this means there. But there's a lot of pressure downwards. So, but I want to start seeing that up. I don't want to see any more backwardation. I want to see people willing to pay more and more for the futures contract for gold. And for me, that's when we're going to be in a sustained move upwards. So right now, it's like really there's a lot of pressure. But
Yeah, yeah. It was really crazy earlier in the year where people were bidding, the futures prices way up above spot, and
yeah,
there were delivery problems all around the world. And then, did you see the COMEX inventory, the gold inventory?
no,
It went up like 10x in I think June to fill all the delivery notices, and the inventory is still extremely high, in the COMEX gold contract.
Jesus, that's a. You look at those stats. You dissect those a little bit.
Yeah, yeah, yeah. I go through the commitment of traders, every single week when it comes out. But yeah, looking at inventory. Inventory was less than 10 million ounces in March, and then the next week, it went up to 50 million ounces.
Wow.
Yep, the inventory. So it was a huge raid. Everyone's taking delivery. Everyone's executing their contracts, and then they squelched it, and they brought in all this gold, supposedly from London, and now the inventory stands at like 50 million ounces of gold.
And that is historically, is that how does that position the inventory? It's
I'm looking back all the way to 1993, and inventories were as low as less than a million ounces of gold in 2001 to about 10 mil
wow.
in 2011.
Jesus.
Yeah, and then about 10 mil. Yeah, but and then also I look at deliveries too, and the deliveries were, basically off the charts earlier this year. So, the Comex came in and they brought in a 40 million ounces to cover all these requests for delivery and kind of squelched it. So, there's a lot of interesting things that happened within Comex earlier this year for sure.
Yeah, it's solicited a lot of attention, right? Yeah, so a lot of people deep dive. I've been following a little bit Deso. He's been deep diving it. The gold, silver, gold pros or gold, silver pros. Sorry, guys, Robert, for not saying it correctly.
Yeah,
They've been looking at that stuff also. It,
yeah,
I try to focus like just on the charts because
yeah,
there's so much stuff. I'm just if I just look everywhere there, I'm gonna be distracted.
yeah. I tell you one thing. I've been following these for years, and to be honest with you, with managed money, commercials, non-commercials, all that, I'm not seeing much here. Like the numbers have not changed much since like August. We're basically at all the same levels. A lot of guys are making news up and stories up. I don't necessarily see it, but one thing I do see, gold net other participants is up at a high of like 35% of open interest. This is the highest it's been in a decade. And I wonder who these other players are that are, getting involved. I don't know. I'm still looking
Yeah.
for an answer for that.
Okay, Tom. Okay, this okay for the U.S. dollar. Let's put this to rest. Well, we'll see how the chart marks. This is what it's been. People have been seeing this since May, down, 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 and everybody. Oh, the U.S. dollar has to go back up. Yeah, there could be volatility, but guys, okay, this square here is it's the same square. I didn't move it, and look at that. That's where you
Mhm.
are, guys. Pretty much. So you see, the U.S. dollar is and if you ever seen the Fed fund rates, this matches it pretty much with a lag. It looks like exactly like the Fed fund rate. US dollar macro driver is high interest rates. The more the interest rates are high, the more people are going to want to hold US dollars. And the US dollar pretty much peaked when we had 20% interest rates. And look at that, it's just going down and down. And now the I don't know if it's going to discount zero interest rates or negative or all that money printing, but the US dollar is it's heading down here, guys. It's the macro drivers are very strong. Even the technicals are very strong to support the U.S. dollars.
Yeah.
So look at this fall. This is this is don't catch a falling knife, guys. It's
Mhm.
gonna be sharp pullbacks, but it's nasty there what's happening. So until we bottom around 81 there, I'd be very careful on putting my hopes up into that the DXY is gonna beat its all-time highs. And if ever there's a DXY rush because there's a market liquidity crunch, well, we could have a high spike, but it's going to be from lower. So maybe when we hit 81, maybe that's when the market crashes and then we have a US dollar spike. But that's going to be it's going to be a lower high on this chart, right? We can't even see the March spike here, barely. Here it's like we hit, I think, 100 something there in March.
Yeah,
So,
and fundamentally regarding that, it's all that chart's all based off rates. Government, you can't raise rates here. You look at negative yielding debt around the world. It's the highest ever. The U.S. consumers all levered up. It's interesting what's going on in the U.S. housing market and the commercial real estate market. The economy can't handle higher rates. They can't go up. The only way they're going to go is lower, and that is dollars losing more and more support.
I agree. It's I was even trying to make myself a case where I'd see the sorry guys when I load that, where I was trying to imagine if we'd get lower rates, because I was imagining like when I see the long-term cycle for rates, I always imagine that we can't go below zero on the nominal rate and we have to bounce back up. But I have a feeling we're going to drive, nominal rates are going to drive through below zero for a short while. And that's going to be, maybe after that, something's going to break. But okay, one last macro chart, guys. I know some guys want to do stocks. Okay, this is like Garrett said, this is the real rates. So this is the Fed fund rates minus the inflation rate. And I know some guys say, okay, shadow stats, but look, it's a chart we have. It's the CPI. This, when we go to minus below minus 3%, 3.7%, this is where silver, gold, and gold go parabolic, and they end their runs. And right now we're just here, guys. Just about. It looks like the U.S. dollar a little bit, right? And after that, for me, this is what I consider fuel. So until we were at minus 3-4% real rates, for me, the precious metals, commodities, even stock market, like everything that's denominated in US dollars should appreciate. And we'd really have to look closely at the charts once we're down here. But like I always say, until your grandma or your father-in-law asks you to buy silver stocks, we're pretty safe there. I try to get my dad, since gold was at like 1250, to start loading up on gold, and he doesn't want to hear about it.
Yeah, one regarding those lines too is that with the dollar losing its value, as you said, the stock market could continue higher. You look at countries that had major inflation before, and the stock market performs the best, on a nominal basis, but on a real basis, it loses money. And then, if that happens here, a bottle of Coke's going to cost $20, in about 5 years from now. If we get high inflation, the stock market could be at $100,000. Gold and silver's time to shine. That's when they do best.
Exactly. All right. Who has a stock pick to check out? And then we could tell you it's awful.
Yeah, all the silver stocks, they're all coiled up, right? They had you can pull up anything right now, and they all popped up. They're all consolidating. Some of them are making new highs right here, very close. And the other ones, if not making new highs, are very close to making new highs. And they're coiling up, getting ready for the next leg higher.
Exactly. So this is as some guys, I did recently I call it it's a Gold Ventures, a GV Sitfolio. It's all his silver stocks. And a lot of, this is the monthly chart, guys. And a lot just either they finish consolidations and are exploding, or some are ready. They're just waiting. Like this one I've been watching, their CCW. This one, look at, it's been coiling tight. And eventually something's going to give. Since we're in a precious bulls market, I expect even the stocks that are so-so, or maybe that don't have good management or good fundamentals, they could still get a boost, and be lifted.
Patrick, let me tell you this. And when you get major bull markets like what we've had off the low in March, the worst companies do best, because these companies are over leveraged. They're the closest to bankruptcy. They are selling for pennies on the dollar. And then when the silver price starts up, their the projects and their profits, or their income, if anything, it's all leveraged to the price of silver. So these things go up multiples. The good companies end up lagging.
Wow.
If Hekla's done well this year, Core's done all right, I guess. But those companies are pretty highly leveraged. A lot of the Hekla. Whereas, the good miners, the ones that have, very strong projects, with low cost, their margins are impacted less by a move higher in silver prices. So the good projects don't move as much. It's the really highly leveraged stuff. And when I've seen Gold Ventures portfolio, and, this stuff is, they're good because, they're better than options because they don't necessarily have time decay, but they've got dilution decay, because a lot of these companies have been around for a while. They dilute hand over fist whenever they have an opportunity. But if you time it right, these companies are going to go up multiples in value. And like I said, I haven't been this bullish in silver in a long time, and I've seen cycles where these things get bid up, then they just get sold off all the way back down. But if this is the one time in the cycle that is going to be different than the previous like 40 years, all the way back to 1970, then yeah, it's a pretty good time to be involved in these smaller, more risky guys. But the way I play it, I like the quality names because, what if we're wrong about the silver move and silver goes down? The low cost, the ones with good miners, the quality miners, they're not going to be impacted as much. So, I'm looking at it from I try to not let the silver price influence my behavior. Yes, I believe the silver price is moving higher, but if I'm wrong, I don't want to be over leveraged and the stuff that is not necessarily the best quality for your buck in the silver market.
This Kefi Gold, is that a silver play or it's gold and copper? This one.
Yeah, I don't know, Kefi. There's a lot of smaller guys that are really starting to pop up pretty quickly. Like, after we had the move in March, April, May, June, all these silver companies spun out their assets. Mag Silver spun out assets. First Majestic spun out assets. You had silver IPOs coming out of the woodwork. So there's a lot of new players out there that I've been working hard to catch up to.
But should I be? I know, like I always seek refuge in the chart, and I know there's a cycle, and I know some people they get maybe emotionally attached to a stock pick because there's a story, and they think that but like you said, eventually they're going to cycle, and a lot of the crap is going to go back down to its intrinsic value zero, right? Because like you said, they're going to
Yeah,
dilute. But
yeah.
it's geez, it kind of scares me because I'm an emotional guy, and that's why I stick to the charts because I'm afraid that, oh look, this company, the price, I'm going to associate the price going up with that company becoming the next Kirkland Lake Gold, but
Yeah.
it's not. That analogy is
Well,
not true. Maybe in the price, it's not.
yeah, well, I tell you what, Kirkland Gold has got some of the best grades in the entire world. They always have, with Mikasa, and then they bought Newmarket with Fosterville. And the reason why Kirkland's such a great company is because they have some of the best gold grades in the world, which leads to low costs and high profits. Now, you look at some of the smaller guys that have languished for years. Their projects are low grade.
Mm,
They don't have the high grades. And they just wait for the silver price to go up and their projects become marginally accretive, and then they end up just diluting it away. But if the silver price stays high up here, the projects that are going to be next up the food chain are the higher grade ones that just are a little bit on the back burner right now. So I look at grade. I prefer grade. That's one of the major things that I look at.
so great. It's like their money. It's like the ounces under the ground. There, I keep hearing that there. Oh, this company has X ounces.
Yeah, there's a silver company. They've got like 1 billion ounces, and the stock's done nothing for 20, 30 years. Everyone in the industry knows it's a cow pasture. But when the silver price starts going up, everyone gets excited and they pump the share price up. But this company's never going to go into production because it needs very high silver prices for it to become, economic. And silver is a volatile metal. It goes up, it goes down. No one's going to risk, hundreds of millions of dollars building a project that's only profitable at, $30 silver. You got to be finding the projects that are profitable at, $15 silver.
Mm.
And that's where I'm focused on.
And what do you call that? Is that the cost? What's the terminology they use there for? Is that cost basis? Cost
Yeah,
average.
all in sustaining costs. Yeah, yeah, all in sustaining costs. If you're
Okay.
mining a ton of dirt, basically it's fixed cost mining that ton of dirt, but you want to get more out of that ton, and grade is that more. The higher grade, the more ounces you're going to get out of that ton of dirt that's got a fixed cost. So therefore, the higher grade you have, the lower cost you have, the highest profits you have. Gold's found in seawater. So eventually, if gold goes high enough, you'll be able to mine seawater profitably.
What?
But then that'll kick the whole supply demand equation out of whack. And bring the gold price back down and back in line. So I don't know if we'll ever get there in our lifetime, but I don't know. It'd be nice, right?
I did not know that at all.
Huh.
Garrett, any chance I'm reading a any chance we'll see you work on some of the smaller names microcap outside of GSA, SSA in this new bull market? Go
Yeah, I
Gold,
don't know.
Orcana.
Yeah, I don't know about microcap, but we're adding, like I'm keeping track of all these smaller guys. Arcana, I added Gold. I'm adding in December. I'm adding Kaya, Cua, and a couple of the others. So yeah, I'm adding some of these that have decent projects. But I'm not going to add any of the micro caps, any of the small guys, but like 10 million or probably $50 million of market cap. But the larger ones like Gold, I think valued at about 400 mil market cap. I will be adding that one.
Yeah, Orcana, I see here it's a 150 million market cap. Gold, gold.
Yeah, I've covered Arcana for a long time, and they blew it up back in what 2012 with Shafter. They spent millions of dollars of capex on a project that was extremely hard, that never worked for anyone. They kept saying it was going to work, it never worked. The stock price got killed. They ended up losing their La Negra deposit due to the agreement they had because they couldn't pay their bills. Now they're trying to start over with the project in Colorado, which it's got good grades, but it's really small. So who knows? Hopefully, new management will be able to do a better job than old management.
Well, that's it. Because I always hope that if appreciating price means confidence from the stock or from investors, and hopefully the management sees that and they say, oh, look, people are expecting us to do better. It's like me, let's say with my kids, and they see they're getting rewards because of their good behavior. I think like the
Yeah,
CEOs that are like the children of the investors, or they should be, right. Oh look, and they instead of spending money on helicopters and luxury outings for the company, they should putting that money to getting good geologists. You know what I mean? Like spend that
yeah,
money.
yeah. I don't know. Companies are like people. You got friends you went to high school with, and you give them $100 and they'll blow it on whatever.
Yeah.
And people are people, and that's the second thing that I look for in miners. You look for great grade, and you look for really good people, because if you give bad people, an opportunity to put more money in their pocket, they're going to do that. And what happens with a lot of these smaller guys with poor management is that the silver price goes up, they take the opportunity, they sell more shares, they dilute the shareholders, and they put more money in their pocket. So that I've seen it work through a few cycles like this.
You're depressing me. Could it be different this cycle?
For the good guys, the guys with good management
Yeah.
that know how to build, creative projects. One of the things they got to look for is you got to see how much how much of a percent the management owns, as far as stock, because a lot of these the management, they don't own any stock, they don't care. All they care about is their management salaries, and they're explorers, and therefore they're not making any money, they're not profitable. So the way that they pay their management salaries is from shareholders pockets, including secondaries and stuff like that. um, so yeah, you gotta whereas the companies that where shareholders own a lot, where management owns a lot of stock, these guys are aligned with shareholders. So when shareholders profit, management profits. So all the decisions management does is to drive shareholder value. And I've been doing the research for 10 years to find out the companies that do this, and they're in my fave five list. And there are companies that definitely do this, but there are companies that don't, that put management first. And they've been running their business the same way for
Jesus.
decades.
Did you
Yeah.
ever see a company where it had all the things you're looking for in fundamentals, but the price action would not cooperate?
Well, like I'm a value guy, right? So, I make my own models of what a company's worth based on their deposit, based off the economics of their deposit. And then what happens is, say something happens with, the stock price, say it goes down for some reason. I don't know, maybe it's in Bolivia, and Bolivia had they overthrew the president, and then the stock gets whacked by like 50%. But so I look at my value of the project. I'm like, damn, at this silver price, this project should be worth, $800 million, whereas the stock price is only trading at $200 million. And there's my discount right there. And I'm like, boom, I'm getting involved in this
Mm.
because, it's undervalued by, whatever, 80%. So that's how I conduct my work.
So value investors, it's buy cheap.
Yeah, you're trying to get as much like NAV or free cash flow as you can for the cheapest amount of market cap. or share price that you pay.
Okay.
It's like a seesaw. Yeah.
It makes sense. And I think
Yeah.
value investors like you, they could get ahead of the curve before technical analysis maybe shows the path.
Well, we get involved when companies get beat up, and they look like crap on a chart, and then it takes a while for the company to really start moving forward technically. So yes, we'd be able to identify it, but we're sometimes we suffer for years,
Yeah.
with a company with bad fundamentals. It takes a while for market perception to turn. We're getting some people are asking for some of the picks here. Aya Gold. I'm adding Aya Gold in January. McEwen Mining. Rob McEwen. He was CEO of Goldcore, and to be honest with you, he during the big growth period, he kind of got lucky with Goldcore because he didn't have anything, and he crowdsourced a gold. A gold exploration project where he open sourced all the drilling data and he gave it out to the community and everyone analyzed it and they said this is the best place to find gold, this is the best place to find gold, and the winner of that project got whatever $1 million or something, maybe 100,000, and then they started drilling there and then they found a huge great deposit at Red Lake and they rode that thing for 10 years. So McEwen did great with Goldcore, but he's done nothing with McEwen Mining. It's admirable that the only way he owns a lot of shares, the only way he doesn't take a salary, so that's admirable. But the company's never really made any money. They dilute often. They just diluted shareholders again like a month ago. We prefer companies with better projects. So
That
yeah,
that was from McEwen. And
yeah, that was for
what
McEwen.
about
Yeah.
Aya? Do you have something on them?
No, Aya, is gonna. They're another up and comer right now. 258 mil market cap. I'm gonna be adding that to my report in January. So Gatos Silver just got spun out, newly traded a few months ago. Gatos, Go Gold, Aya. I'm gonna be adding them in
Mm.
January, and
Yeah.
they'll be fun to watch. But I've been following some of these explorers for a few years here, and some of them don't necessarily have the grade. They need the grade to become attractive. And then, these companies are being spun out by the big boys, MAG, First Majestic. And then if these were such exciting projects, then, why did MAG and First Majestic spin them out in the first place? Why didn't they keep them in their portfolio?
Mm.
It's because, people are getting hyped up over silver stocks and 2 + 2 = 5 here, where, they can spin it out and create more value. So, it's good. We prefer, when companies spin it out, that they do stock dividends as opposed to, the spin out company receiving all the shares, such as say First Majestic and Silver Dollar. First Majestic owns a lot of the Silver Dollar shares now, but they should have spun that out to shareholders because you can create a lot of value that way through these spin out dividends. We invested in Silvercrest Mining back in 2015. That was a classic story. Great grade, low cost, strong profitability, but the market wasn't valuing it like that. So we got involved, and Silvercrest Mining got bought out by First Majestic Silver. They stole it. The market was getting hammered in 2015, and Santa Relina has been the best asset for First Majestic. But what happened was Silvercrest Mining spun out their Silvercrest Metals, their Las Chispas deposit, to shareholders. So all shareholders got stock dividend. That stock dividend went from 10 cents to $10
Mm.
over the past 5 years. It went up 10,000%. So, we love to see stuff like that. That was a great winner for us.
Oh yeah. So Silvercrest is
Yeah.
awesome there. It's
Yeah. And Silvercrest, yeah. So, Silvercrest is a great project. It's extremely high grade. They're coming out with a new feasibility in the first quarter of 2021. We think their resource is going to be bumped up. They had some, they call them lower grades, but it's not like 500, 600 grams a ton. They're going to be replaced by 1,000 grams a ton. They're going to keep the small footprint. They're going to keep this smaller mill. And they're just going to be driving grade through it. And, we think the economics are going to be outstanding.
yeah. The chart there from Mux there. Look, see Garrett. He told and the chart's just
Yeah.
horrible. It's look, guys.
Yeah.
It's below a declining 1 year, 3 year moving average. The momentum is down. It should be going up. The precious bull market. This should be inversed. You should not be below. You're underperforming. You should not be here at this stage with all the hype around the precious metals, guys. You shouldn't be there.
Take
Something's
a look at SILV to show the other side of it.
SILV.
SILV. See, I like companies that are control their destiny. They're not totally they're not totally reliant on price of silver to drive value. A company like Silvercrest, they're able to drive value from the project and create value. It's about getting money from shareholders and putting it back in the ground and drilling and, raising 10 mil and generating 100 mil of value. That's value creation right there. And Silvercrest Metals has been doing it every step of the way.
Mag's a big one. Somebody want to check out Mag.
Yeah, I know Mag really well. I've been down there a couple times. George and Mike are great guys. They own 44% of the Juanicipio deposit. Juanicipio is an amazing deposit. It's right across the divide from Fresnillo, Saucito. And Saucito runs at 8,000 tons a day. It's, grades dropping slightly, about 400, 300 grams a ton. But that's driven Fresnillo for years. And now Mag is starting production now at 500 tons a day. Their mill's going to be ready in the first half of 2021 at 4,000 ton a day, and it's likely going to expand to 8,000 tons a day, like Saucito, over the next few years. But bottom line, it's great. It's like 700 grams a ton. It's a gold, silver, lead, zinc deposit. They're going to be mining a lot of it at very low cost. It's going to be extremely accretive. The other thing with Mag is, they don't, since it's a 44% passive owner, they don't have a lot of overhead. They got George and Michael kicking back there and counting the money. They don't have 100 people working for them. So, you almost can put a higher royalty multiple on Mag. Like you said, the average gold royalty trades at like 20x, I don't know if it's going to get that high, but 10x would be